There is a lot of opportunity right now in oil and gas. Colorado is a great place for innovation. And where we as Innosphere, as a technology incubator, see a lot of innovation is at the intersection of industries. And that theme may come up a bit here today, but some of the companies that are pitching later are at that intersection. For example, the intersection of software and oil and gas. And we will be working with these gentlemen to kind of talk through from a global level to a federal level to Colorado to technology and innovation, business model and technology innovations, what some of the opportunities are. So a little bit about myself real quick. My title is a bit mislabeled. It was clean tech. I work primarily now with energy technologies and material science technologies in our incubator. And we work with startup companies ranging from a prototype to early direct sales, but perhaps not a repeatable sales model yet. And I'm inserted into the companies to figure out, does it work? Who the hell's going to buy this? And who the hell else is going to buy it? Because we got to get to plan C eventually, right, for a market. And then how do we raise capital? My colleague Doug does a lot of work with that as well. And then really, how do we enter the market? What are our partners? Because when we talk about markets like energy in particular, you don't go to market alone as a startup. You go through it with some form of channel partner to help you access incredible sales and de-risk the perception around the technology. So Innosphere is headquartered in Fort Collins. I'm here in Denver. In the past 3 years, I've worked with about 13 companies commercializing technologies for use primarily in upstream oil and gas. Those range from environmental technologies to advanced materials to robotics and a term we have called the digital oil field, or the intersection of software and sensors with oil and gas. And there are some other opportunities coming up real quick that I'll mention this fall for really interesting startup companies in this space. Next week is the Northern Colorado Energy Summit. And there's a group of companies presenting there on technology to the rescue in Loveland. In August, the Koga Energy Summit, which is several days, 3 days. On the 26th, there's an entire half day dedicated to emerging technologies. We have companies coming from Alberta and Colorado, all around Colorado, to present at that. Josh, you'll be presenting at that. Raise your hand. That's it. And then we have in September an opportunity that occurs quite frequently, but we intersected with Denver Startup Week, which is the Energy Tech Mashup, where we look at the intersection between software, digital technologies, and oil and gas. So watch for that in September. So with that, I'd like to introduce our panel real quick, and then we'll get to them and talk a bit more about what they're doing. Certainly you see them up here. We might leave them up here the whole time, and then we can also see you here. But first, we'll introduce Doug Flanders from Koga, Tim Wigley from the Western Energy Alliance, Sean Ebert from Altera Group, and Stan Dempsey, who's the CEO of the Colorado Petroleum Association. So I'm going to hand this to you guys, and we'll just pull it together. Oh, you got some. Great. I thought those were papers. There you go. Great. So, actually, Stan, I'd like to start with you. And then Tim will work to you, and then Doug, and then Sean. So, Stan, give us a few minutes. Tell us about yourself, and tell us about the work that Colorado Petroleum Association does.
Thank you, certainly. I'm Stan Dempsey. I don't know if I can speak into this. Talk loud. I can do that too. I'm president of the Colorado Petroleum Association. And Colorado Petroleum Association, like a lot of trade associations that work around the country, works for the interest of the oil and gas industry. We focus on upstream, midstream, and downstream. I say everything from extraction to refining and marketing. So we have lots of different policy areas that we work on. With our friends at Koga, we focus our efforts on the Golden Dome Daycare Center, which is becoming even more true. I'm sorry, the state capitol, which is made up of 100 brilliant people who seem to have found a way to get elected every 2 years or 4 years. And they were term limited, so there's you're having to reteach old lessons to new dogs every opportunity. And then we work in partnership with Doug and Tim's organizations on a variety of regulatory issues. We work from what you normally expect, the people who regulate the conduct of oil and gas, the extraction of that product, the operations, the way the wells are drilled, how far they are from homes, to the way air quality is managed, water quality, waste. We also cover tax issues. We have a variety of committees, that subject matter experts that advise us, who help us pull together what is usually a consensus point of view on any particular topic. And they can be very nuanced sets of issues that our member companies help us become experts on for about 15 minutes, and then we're on to the next topic. And then finally, from time to time, we engage with the courts. We have worked together to provide a friend of the court perspective by filing motions to support a collective industry position in front of the courts. From time to time, I know Tim focuses a lot on federal issues. We will weigh in collectively to advise the federal agencies on our views. And in our case, numbers are very powerful to show the strength of the industry's position. And then we also do a lot of work on air quality issues that is an increasingly important aspect. I have in my organization concerns about air quality and technology as it applies to new rules that cover oil and gas. And then I also pick up the downstream side, so motor vehicle emissions, gasoline formulation, things like that. So that keeps me and a part-time assistant pretty busy. And fortunately, we've got a lot of great partners who we can work closely with. And we don't try to tackle everything, and that's the power of working with 3 or 4 trade associations. We can really split up and then come together when it's appropriate. So that's what we do.
Great, thank you. Tim?
I don't think I've ever been associated with the word angel in my entire life. I know these two guys. That's true. And secondly, I do have more than one tie. I didn't know that was going to be upside down. Yes, only one tie. I appreciate the chance to be here. I'm Tim Wigley. I've been at the West Energy Alliance for about 3.5 years. I'm not an engineer, I'm not a geologist, I'm not an attorney. I've always wanted to work in the oil and gas industry, but my career has heavily been in natural resources. I spent 15 years kind of doing what I do here for the timber industry in the Pacific Northwest, and also worked in the mining industry, and really I'm a campaign hack. I've managed campaigns all across the country for many years, and lots the last 10 years before I came here. Ballot measures. Of course, when I came to Colorado, I find out that ballot measures are pretty popular here. So I guess the timing was appropriate. The Alliance has been around since 1974. Some of you may have heard about us in our previous life called IPAMS, Independent Petroleum Association of the Mountain States. We've got just under 500 member companies, ranging from E&P members to lawyers to environmental consultants to service companies and so forth. And while Doug focuses primarily on the state of Colorado issues, and we do closely monitor what's happening in Colorado and all the states, we focus on federal rules and regulations, and we focus on Congress. So when you talk about the Golden Dome,
I'm sorry, I didn't realize there was a camera.
Well, having been around politicians for many, many years and having ran a number of campaigns, it is challenging when you get into particularly issues like this that are so complex. And the thing about the oil and gas industry, as I was telling someone before we came in, what I like about it, like a lot of other natural resource industries, is made up of a lot of really good, smart people far smarter than I am, but they're also very humble. They're not braggadocious type. They're not the type of people who are sitting out holding signs and screaming at you and asking you to sign something. They're not down in their mother's basement in their boxer shorts blogging either. They're working, and they're really smart, and they keep their head down, and I appreciate that about them. And I think probably the four of us probably share frustrations at times that, you know, they're doing a lot of good things, whether it be wildlife, whether it be air quality, water quality, and so forth. And we're trying to get them to talk about it more. But my organization is, again, been around since '74. We've got members in 22 states. Our core focus is on the Rocky Mountain region. We work closely with the likes of COGA, New Mexico Oil and Gas, and so forth and so on around the country. And again, spend time in DC lobbying Congress, lobbying federal agencies like the Department of Interior, and Forest Service inside of USDA, EPA. So there's no shortage of activity right now, and I'm sure we'll get into more of that detail. So that's who we are, what we do.
Thank you. Doug?
Right, if all of a sudden I start spinning, I'm in a spinning chair, so I may have to stand up. I keep on moving over. My name is Doug Flanders. I'm Director of Policy External Affairs for Colorado Oil and Gas Association. We are very similar to both of these organizations, but our main focus is within the four corners of the state of Colorado, working closely with many of our sister organizations just to be able to defend the oil and gas industry, both at the Capitol, on the streets and the ballot measures, and as COGA, and I'll get to this for just a second, also in the courts. And so COGA has roughly 250, 300 members, just very similar to Tim's, ranging from the Exxon Mobil down to an independent company it's two brothers and a mom. So as we probably in this room, but very much in my board, I get a very variety of opinion on what do we need to do as an industry, because everything that happens impacts each one of them differently. We also do have a lot of law firms as well as financials, so Wells Fargo is a member. We also have investment firms that are also members of COGA, and it's really just to be able to be with that industry from the size that we have. COGA really does three things. My dad's a preacher, so it used to be 3 points in a poem. So everything's got 3 points. One is one of our main focuses is legislative, regulatory, and legal. And so legislatively, working down at the Capitol, working with elected officials, state elected officials. We do some work with Tim with some of our federal delegation, and we will work with our federal delegation. They have specific Colorado issue, but we try to do as much cooperation as we can. We also work in the regulatory realm, which Stan already mentioned, and I'll get into that in just a little bit further. And the third one of this leg is legal. You may have read that COGA is actually suing for 4 different localities due to fracking bans. One of our main emphasis in the last 3 years has been community outreach. And so we have a lot of people ask, if you want to work on community outreach and become beloved by the citizens, why are you suing us? And I'm like, because you banned me. And so there's a lot of those kind of conversations that we have. They're very difficult conversations we have. But one of the things we do have to do is draw the line in the sand and say, if you're going to ban oil and gas in your community, we're going to stand up for our companies. The 300 companies that are dependent on us. We're going to have to then support them in a legal environment. So the second second leg is community outreach. This is where we work throughout the state at different localities, whether it be in Greeley, Grand Junction, some in Durango. We work in different community outreach in these localities, working with city councils as well as local elected officials. And then the last is stakeholder outreach. And what that means is internal and external stakeholders. We do quite a bit of internal outreach to our member companies. One of the things that we try to do is make them very, not just appreciative of their organizations that they work for, but appreciative of the industry itself. It's amazing when you talk to an accountant that may be on the 7th floor and everybody else is on the 19th floor. They may not even understand oil and gas, but they can tell you a whole lot about the taxes. They couldn't tell you anything about how the oil and gas industry works. It's really getting them comfortable to be able to explain this is the industry, not just what they do, and then make them proud of this industry, even if they're and living in Boulder. And then the last is an external stakeholder where we work with the Denver Chamber We work very closely with Casey of the State Chamber, as well as NFIB and a lot of other different organizations. And so that's COGA in a nutshell. We have roughly about 10 people doing this, and 2 of them are working on our conference, which is in August. And that's about 3,000 of our closest friends coming to town for a 3-day conference, and it's a great thing. If you want to go look at it, RockyMountainEnergySummit.com and register. It's fantastic. It's a high-level conference with high policy discussion. It's not, except for a few days of technical, and then there's the working with Innosphere with some startups and some pitches. Most of it's going to be in this very high-level CEO discussion about what is their outlook for the next 5, 10, 15, 20 years for the industry, where the company's moving, and then how the international politics going to play into all this. And with the new Iran deal, fantastic for my conference. So that's going to be really exciting. So it's going to be August 24, 5, and 6, or 25, 25th, 26th, 27th. So it's Tuesday, Wednesday, Thursday. Monday's the golf trip. So write that one down.
It might be in the bowl.
If it's not, it's like you have like one more foursome left. That's about it. It's pretty cool. So.
Got it. Thank you.
Great, thank you, Doug.
I'm a partner with Altera, a bit of a different animal than my colleagues here up on the panel in that we're a technology fund that focuses at that intersection of technology, whether it be software, hardware, anything in between, in oil and gas. A bit of my background, I've been in the oil and gas business my entire career, starting off as an engineer, Texas, Louisiana, offshore Gulf of Mexico. I did about a decade in 2 tours of duty with a big strategy consulting firm, basically serving the big oil companies. Half my time in private equity firms, focused on oil and gas, the other half of my time, in the middle of which I sort of went on, took over an energy tech startup company. Thought it'd be a great experience, managed a P&L, realized that the P part of that equation was kind of elusive, but I can say that I managed an L. When the opportunity to join Altera came up, I leapt at that. Been there for coming up on about 8 years now. And just a bit about Altera. Altera was formed in '96, closed its first fund, Fund 1 in 1997, with my partner Dirk McDermott's vision to really fill a vacuum in the industry to provide funding for emerging oil and gas technologies. Sort of a white space, serving areas that aren't being met by Schlumberger, Halliburton, and friends. And over the years, we learned a lot of lessons. And when we went out to raise our current fund, Fund 6, which we closed last year, we did a lot of soul searching around what really changed the game for us in bringing emerging tech companies to our very beloved but very slow adopting industry of oil and gas. And so to make a long story short, we went out and we were successful in bringing in not only our traditional financial limited partners, the people who invest in us, but we brought in 4 of the super independents. So start counting after the Exxon Mobil's, ConocoPhillips. That next tier are who we went after and brought them into our fund. And beyond just their dollars, we have a very structured way that we work with them. We spent time through the fund closing process in really understanding what are their most pressing needs in the field. We got a razor's edge to what we do now. We know exactly where to go hunting. They provide due diligence support at such a degree, Dirk and I often talk and go, how the hell did we do this before? And then ultimately, the end game is to be a matchmaker, to basically bring a huge purchasing block to these emerging companies such that, I don't want to be guilty of hubris, but we can largely pick the winners in this emerging sector.
Great. Thank you. Thanks a lot. So I'm going to pose a few questions to these guys over the next 10 to 15 minutes, and then when we near the end of this, we'll have time for some audience questions as well. So keep your questions in mind, and we'll get to those in a bit. So we're going to start. We're going to go back to the oil price that Peter was talking about. And Stan, I'm going to pose this question to you, so you can tee it up, and feel free to chime in, guys, as you would like to. But Stan, I'm going to read it right off here.
Okay.
I wrote it, and it's so eloquent that I read it right off my phone. So please help us understand the recent events, the current state and the forecast for oil and gas. Certainly there's two aspects there, oil and gas, at a global level. And why oil prices in particular, dropped so much. Where are we at now with some recent increases? And what are the leading forecasts for oil and natural gas prices over the next few years? And I ask this question as we have a lot of problem solvers in here to understand what is this kind of global crunch we're in that could actually open up some new opportunities.
Well, I'll just start by saying, I know that you're all familiar with cautionary statements. The cautionary statement I use when I talk generally to the media is, if I had a crystal ball, I wouldn't be doing this. But, you know, I think back to last Thanksgiving on Friday. And many of you might remember we had just a falling knife in terms of oil prices across the world. And that was due to the Saudi decision not to cut production in response to the world oil markets. But if you take a step further, the large impact on Colorado in terms of production, as well as changing strategy by a number of our member companies. If you go back to 2008, the price of natural gas took a real nosedive. Now, those of us in the industry like to say that was the Ritter rules, the overhaul of the oil and gas rules that were blamed for that. Well, it's partly the case, but I'd say overwhelmingly it was a changing dynamic, and you all remember what 2008 was like, 2009, 2010, we had an economic slowdown. That's probably too light of a word for it. So before 2008, oil and gas production was growing in Colorado, particularly for natural gas in western Colorado. 2008, since then, you know, you've seen a high unemployment rate in Colorado, and the price of natural gas has really not recovered for very long over the $3 an MCF price point. And during that time, companies that we're all familiar with were very quickly changing their strategy, moving their assets, maintaining their assets in western Colorado, but quickly moving to a liquids-rich asset base. Moving, you know, and I remember one company told me that they were going to be moving to eastern Colorado. I had no idea that they had assets in eastern Colorado to develop the liquids-rich oil and other liquids in Colorado. And so in the last couple of years, we've had a wonderful price increase due to world markets, geopolitical factors, strong economy in parts of the world, maybe not all of Colorado, but you know, geopolitical politics certainly led, and decisions by individual countries, as well as the spectacular, I mean, you cannot say this enough, spectacular success of the United States in terms of developing its resources, the application of technology, hydraulic fracturing, and horizontal drilling. And we saw oil production increases in Colorado double. All of those combined, basically a market crash, and then the price kept falling until January, and then it's kind of risen back up until just now with China having its weak economy, perhaps. I don't think it's maybe too early to say if we have a deal with Iran, but at least an announced proposed Iran deal with, I think, 30 million barrels of oil ready for export. That's creating another situation of more havoc in the market. Looking forward, what I've heard is that there could be, perhaps over the next 2 years, that price drop to 45 and sustain itself there. Maybe it's 60. You know, I think in the Denver-Julesburg Basin, $60 is kind of the number that people talk about. We're seeing continually rig count drop. So I think we're in for a bit of a rough patch here, but let's remember what the good points are. One, if we ever get this economy going again across the country, because this industry has sustained the economy from where it is now, if we could get a general economic improvement, if we could get, and if nations are still going to be at peace, and we can have a consistent price, that will lead to companies making decisions about their future going forward. And I was asked today, what is the Iran deal for market prices on the street here in Colorado? Well, I can't predict that because there are so many factors going into that. But maybe some of our other audience or your panel discussion will lead to some of that. But I think it's going to be very hard to predict, but I think it's going to be a rough couple of years.
Great, thank you.
Can I jump in real quick?
Yeah.
Just a couple points to that. One is, I also do press, and I do my political role and policy stuff. So when I talk to reporters, I have to explain to them that we are actually producing more oil and natural gas with fewer rigs than in 2008. The efficiencies of the technologies that we have been amazing. Before I did this work, I was in DC at the Department of Energy doing nuclear energy. And there's a lot of technology there, but this is amazing stuff. When you think about basically going a mile deep and a mile across and being able to hit the size of a refrigerator, based on just what you're seeing on a screen that makes no sense to anyone up here, maybe you, us, but it's an amazing technological feat that what we're able to do with less. And we're actually our production in Colorado is still going up, just not as fast. When we're losing rigs on a daily basis, that's number one. And I think the other good point that we're seeing is that Colorado, the oil and gas industry is $29 billion at the economy. We're like depending on the week, first, second, or third for an economic driver for the state. And if you think about any other industry that can go from $100 a barrel to $50, literally cutting profits in half, almost within 2 months, where do you think a third of that economy would go? Our guys have responded so quickly that it would have devastated us 5 years ago. I mean, as much as I'm surprised, as much as 5 years ago, I never thought I'd see a cannabis conference. This is still amazing to me that we can lose this much of our assets and profits within the industry, 50% off the board. I mean, it's not like it's not like consumers all of a sudden are spending less. Their prices just collapse. But you're not finding that here. And I think that has a lot to do with an industry that learned over these boom and busts of the last 20 years, how do we respond? How do we move quickly? How do we stay flexible? And I think this is where, from an angel investor technology, there's a lot of places to play because they're having to make decisions a lot quicker than they used to. We are slow moving. I mean, hell, half our guys don't even know what Facebook is. But I mean, at the same time, they're having to make decisions so fast now that they're bringing in younger folks to be able to try to help them understand this new operating environment because it's just not how it used to be.
If I can just add, because we're writing checks against this oil price regime, so we have to have a perspective. And from our vantage point, we're sort of bracing for impact. We're looking forward to a longer term period of low oil prices, because what the real shift was, and there's lots of micro stuff we can do within the state, within the US, but there's a philosophical shift by the kingdom. In Saudi Arabia, they pivoted from, we want to maintain our fiscal break-even price, which is the price per barrel times how many barrels we produce, to balance our economy. And they diverged from that. So many people thought, well, this is unsustainable. Until you start peeling that onion back a little bit, and you see how much cash they have. If they cut out of their own budgets, how does that extend the runway? And then they can always borrow. So this could extend well into the 2020s. And fundamentally, what's at play here is there was a chart, which I'm glad someone put a supply and demand curve up here, because that's what's driving it. It's just the microeconomics. It's an efficient market. Although you have some players that are optimizing their own net worth. I mean, if you think about it, if you're Saudi Arabia, this isn't evil or diabolical. They look at this resource they have in the ground, and how do we optimize that NPV? And we've seen this before in the 80s, where they didn't move, and they let the North Sea genie out of the bottle. Because many folks also think that this is an attack on US shale, but it's not. It's really, we want to stop those multi-billion dollar high capex projects, deep water, heavy oil sands, such that once that capex is spent, their marginal cost of production for decades is nothing. That's what they want to stop. We, as the shale producers in the US, we're the agile, we're the nimble, we're the quick, we embrace technology. We, to folks who may have experience with the power industry, we are analogous to the natural gas peaking plant. I'm on, I'm off, I'm on, I'm off. I can respond very quickly to market moves in price. So that's where we see it, but we're bracing for sub 60, sub $50 oil with everything that we're investing.
Doug made an important point. I grew up on the city, and all my family's still there, and our state's always been a boom and bust. I mean, I don't know how many times as a young kid, not in the oil and gas industry, not with any family in the oil and gas industry, watched how difficult it was, the devastation that was done with market downturns and so forth, versus now. I think if my history is correct, I read this about a month or so ago, except for the drop, the downturn in 2008, you got to go back to 1900 where you had a 50% drop in prices in a 2-month period of time. That's an astounding piece of data. And for the industry to be able to adapt, I mean, again, not having gone through one of these, you're going to go through a series of the next phase, and companies are already looking at other companies and mergers and acquisitions of possibilities out there. But everybody tells me, when they come out of this, leaner, meaner, better apt to move forward. And one of the things that's difficult for any industry, but particularly ours, we like to call it at our shop a definite maybe. When you have this kind of situation in markets, combined with having situations in the regulatory and legal arena, it does cause big challenges for us. But this industry is far better apt to deal with that, as evidence of what you were saying, Doug, than it was a generation ago.
Well, Tim, I can stay with you and want to talk about federal policy. So take it from a global perspective here to the federal. What do you see on the horizon? Certainly, the federal regulations can influence this industry significantly. Where do you see certainty and uncertainty here in the next few years?
I'm not here to make a partisan statement whatsoever, but I spent a lot of time in Washington, D.C. I moved here from there 3.5 years ago.
oh, by the way, they're all 55 years old and they're retired soon, so you got a workforce issue. How do we manage the production of these assets over time? Because they peak quickly in about 2 years, but then they produce for another 2 to 3 decades. How do we manage that? Artificial lift technologies, enhanced oil recovery, water. When you think about the cost to drill a well, and depending where it's, I don't know, $5 to $8 million bucks, about a third of it is actually drilling. The other 2/3 is completing and hydraulic fracturing. Big component of that is water, and it's getting bigger and bigger. So there's so much innovation going on there. It's not just processing, but there's recycling, there's software companies looking at how do we manage the life cycle of this, can we create new specs and create trading platforms for water, and then this kind of overarching life cycle management of the basin, and that's everything. That's software, that's process, it's sensors, it's the overused digital oil field or intelligent field. And then across all of that, when you look at the U.S. independents, which are the Apaches, the Devons, the Anadarkos, the Chesapeakes, and so forth, the world that gave birth to this, they're nothing but an amalgamation of a whole bunch of small startups, smaller oil companies. So one of the big issues is you talk to CIOs and they're like, I'm managing 300 plus executables. So there's all types of back office systems, big data, this system doesn't talk to that system, some things are archaic. It is, for me as a technology investor, the biggest fairway out there. And there's lots of ways to play, from the multi-billion-dollar funds to angels. And this is a rich space for angels. I don't think, not so much here, although there's some activity, but in Houston, I can tell you it's all oil and gas, and have some very